All right. Hey, everyone. Mark here. There we go. Mark B Markets. Thank you for joining me for another Bitcoin video analysis session. Today, we're going to be looking at the corrective cycle in Bitcoin, which I've been warning you about. And we're going to talk about the levels and how to trade this on smaller time frames. This stream is ideal for smaller time frame strategies like day trades and swing trades. I'm not really talking about investing here, although we can touch on some of those bigger picture levels. All right, so if you're new here, welcome. I am streaming on TradingView. Let me just move this over so I can see. Oh, that's the wrong window. Hold on. Let me move this over so that we can see what's going on here on TradingView. All right, and let's get this stream started, shall we? Okay, so hold on. Let me just pull up the right slide and we'll get going. I'm going to make this brief. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Okay, now, real quick, as you know, here's how I conduct the stream. First, I go over the economic calendar, right? Then we talk about the Bitcoin situation, and then we're going to talk about one of the trade scanner trades that Steen is going to share on the channel. Hey, Schwartz, how are you? Long time no see is right. Schwartz from Romania. Do you know that Alex, who's been in the chat since those days, what used to hanging out in the chat from Romania, he's still with me. He's the only Romanian guy left in my chat. Okay. Out of all the Romanians, I used to be very famous in Romania. Schwartz was like one of my first fans, but Alex is still with me. So it just shows he's the real committed one. But anyway, it's good to see you. I'm just joking around. Anyway, if you're new to the stream, again, everyone else, welcome. If you want to share what city or what country you are from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. So if you're wondering why I sound like this, that's why. All right. Anyway, so it's good to see you. Oh, having problems with Dan? You've been having problems with Dan? Oh, okay. Yeah, my Romanians, man. I don't know. I sent him a message. He doesn't get back to me. I don't know. I'm just no longer famous in Romania. I guess the Tate brothers took my fame away. I don't know. Anyway, so again, first we're going to get into this economic calendar. He's in the U.S. He's in the U.S. Oh, he should contact me. I'm in the U.S. too. Okay. There's Alex. Alex, look, Schwartz is back. He's from your country. All right, we're having a Romanian reunion here. All right, so I'm going to try to keep this brief today. I don't want to spend 3 hours on here talking too much like I usually do. Okay, so we're going to get into the economic calendar first. Then we're going to talk about this charting situation. Then we're going to get into the scanner trade. Also, I just want to mention a couple of things. Make sure you check the links in the description. There are 2 affiliate links in there. One is for Bybit, one is for MEXC. By opening an account, putting money into an account, if you place trades at one of those exchanges, Steen gets a small cut of the profit or the transaction, and it goes a long way in helping him support the community. So he's done a lot of great work, and we're continuing to do the work, okay? And I just want to give you guys a hint or a glimpse as to what our next project is going to be. All right, and I asked the community about a week and a half ago. I went into the community and I gave people a choice. I said, here are 2 choices, right, that you guys can vote, and you let me know which one you are more interested in, and this will be the next project that we work on. Choice number 1 was having the trade scanner trade for you, okay? And then choice number 2 was converting the trade scanner into a script that you can put on your TradingView charts. Which one do you think everyone picked? Everyone picked the second one. They want the script. So that's the next project in the pipeline. We're going to convert the trade scanner, okay, that you know about, that generates trades. We're going to convert it into a Pine script tool that you can put on your TradingView chart, which opens up a lot of opportunities because now you could use it on any market, on any time frame at your convenience. Okay, so that's what we're working toward. Now, that's something that's going to take a little while to develop, because again, we have to work out a few things. So I really can't put a timeline. Maybe a month, because we have to put it together, we have to test it, all that stuff. But when it's out, you'll know. Anyway, I'm mentioning that because that's the kind of stuff that Steen is helping me with, and it's very, very, very helpful. Okay, anyway, Just wanted to mention that. Now, let's get into this economic calendar real quick, and let's talk about what's going on here. So I like to put the economic calendar in your hands so that you get a good sense of what is going on, because I know what to look for. Okay. I want you to know what to look for. So here's what I'm going to do. I'm going to ask you guys some questions. Okay. So make sure you're checking out your economic calendars. There's one on TradingView. You can check that one out. I'm not going to show it on screen because I want this exercise. I want you to get value out of this exercise. There's Stian. I was just telling him about the script. So anyway, economic calendar. Anyone want to just kind of chime in and tell me what they think is important this week? I don't see anyone on TradingView. Is anyone on TradingView watching me? You give me a hello. Oh, there's Milad. How are you? Get all my regulars back today. Good to see you, Milad, from New York City. My only New York City fan. Nice to see you. All right, cool. If you're watching me on TradingView, if you can't see me, just make sure you refresh the screen. That usually solves the problem. Okay. So anyone want to chime in about the economic calendar? What do you think is important this week that we should be paying attention to? Anyone? And you can also say, I don't know. That's something you can put. All right. Now, while you're putting your answers, I'm going to ask you some questions. All right. So do we have any CPI meetings this week? Okay. Armin says FOMC. Okay. So Armin, what day and what time? Can you share that? FOMC meeting, because I was going to ask you, all right, so do we have any CPIs? No, CPI was like 2 weeks ago or a week before or whatever, right? Do we have any PPIs? And I'm talking about US numbers. I'm not talking about from other countries, right? It's really the US CPI, which is the Consumer Price Index. Someone had asked me a week before what it meant. I forgot. It's Consumer Price Index. How about PPI, Producer Price Index, right? That came out also the previous week. So we don't have those this week, right? Anything else? March 20th, FOMC. Okay, so that's in 2 days. What? That's Wednesday. Usually FOMC meetings, right, are at 2 o'clock Eastern time. That's usually when the interest rate decision comes out, followed by a press conference at 2:30. This is important to know because the market can act in very erratic ways going into the meeting. So this is especially important if you are trying to day trade, because things can get the volume can shrink, things can get very erratic, and you want to try to avoid as much as possible putting on trades going into that meeting, right? So that's definitely a key report this week. And usually the market may get quiet the day before going into the meeting because no one wants to really commit to any major positions usually, right? Anything else besides the FOMC meeting? Bank of England interest rate decision on March 21st. Okay, Armin, that's fair. Interest rate decisions from other countries are worth mentioning. So we have Bank of England, right? So people that trade the pound, it can have an effect there possibly. It's not as big as an FOMC meeting, but it's worth noting. Okay, so any central bank that has interest rate decisions are worth noting. All right, so we'll put that in the notes. Thank you, Armin. Anything else? Like, do we have non-farm payrolls this week? Anyone? Anyone want to answer that? Non-farm payrolls? Any Chairman Powell testimonies? The only Chairman Powell thing we have is the FOMC. Okay, we got that. But no, we don't have non-farm payrolls. We don't have any other pieces of information that are worth mentioning. When you check an economic calendar, there's usually a ton of information on the calendar. Most of it is not really market moving information on a global level. Okay, so don't be confused. My point is less is more. We're only focused on these major reports just to be aware of so that you don't get caught. All right, because one of these reports, like the FOMC meeting, we don't know what the outcome is going to be. There's all kinds of people that are going to guess. Well, I think he'll do this. Well, I think he'll say that. I'll think he'll do this, right? But no one really knows until the outcome of the meeting. And that's when the market reacts, right? And there's no way to know which way it will react. He may say something that sounds one way. It may sound bullish, but then you get a bearish move, right? So you have to let the market figure it out. So I basically think of it as a range expansion, a large, broad, random movement that can basically, I've seen many times where it may sell off, like the S&P, for example, may sell off 30 points or whatever, 20 points in like 5 minutes, only to rally back 30 points in the next 5 minutes. Right? So you can't you can't react to the initial movement. Let the market settle usually. All right, but that's good. So we know what's going on this week. Those are the main things. Each week, every Monday, you should check your economic calendar and you should just be aware of these things, okay? Non-farm payrolls, CPI, PPI, FOMC meetings, and Chairman Powell testimonies. Those are probably the most important reports you want to pay attention to. And secondary would be interest rate decisions by other central banks. Okay, cool. So thank you for sharing that. Now, we're going to get into this chart here. All right, next on the list here. Let me make my chart bigger. Now, before I get into the chart, I want to ask a question. All right. I always ask for feedback. And I ask people, what can I do better that would make my stream better for you and this and that, whatever. So someone suggested that maybe I incorporate some fundamentals into my stream. And they gave me a reference. They gave me someone to look up so I could see what a fundamental streamer does. Okay. So I checked it out. And here's the question that I want to ask you. If I showed you a graph, okay, of Bitcoin, where Bitcoin will be in 2040 based on a 30% compound rate of return, blah, blah, blah. If I showed you this nice fancy graph and it shows you that Bitcoin will be like at $4 million a coin by 2040, right? That's what the graph estimates. Would you find that information helpful to you? Yes or no? How many people would find that information helpful? Just give me a yes or no in the chat real quick. I show you a chart, a graph, okay, that basically shows that Bitcoin will be worth $4 million a coin by the year 2040. I'm showing that to you now. Let's just say. Not helpful for you, Alex says. No, Peter says. Anyone else? Anyone else? So far, I'm just getting a few no's here. No, Asperinus says. Not useful. Okay. Why? Why isn't it useful? Anyone want to just chime in real quick? Why is that not useful? And then I'm going to get to my point here. Mason says no. Okay, interesting. Now, this guy that in TradingView, I get a guy who says no. You guys are all saying no. Okay. So let me get to my point. I watched this streamer. He was coming up with all kinds of facts and figures. Hopium, Armin says. It's unreasonable, and the time frame is way too long. Out of the blue. Okay, so now this is presented as basically factual information, right? Like this is a fact. Bitcoin is going to be at this price in 2040. Right now, I thought the same thing as you guys. How does this information help me right now? Great. In 2040, it's going to be at 4 million. How does this help me? The only thing I could think of, and meanwhile, this streamer had over 5,000 people watching him. Okay. I mean, I can't even get 100 people. This guy has over 5,000 people. And he's just showing slide after slide that are similar to this, right? These facts and figures pulled from the internet, this and that, whatever. All this great stuff, all this exciting things about how Bitcoin is just going to continue to the moon and it's going to be at 100K in a couple of months. And here's why. And here are all the ETFs that are buying all this stuff and all that stuff, right? So you get my point. I'm sitting there. I'm like, how is this going to help me right now? How is this going to help me in the next few days? So the conclusion I came to was this type of content really only serves to make people happy or unhappy, right? So if you've bought recently at like 60K or something like that, and this guy's showing you all this exciting stuff, you're going to be happy. You're going to be, oh, I'm a genius. I'm so glad I bought this thing at 60K. It's going to be at 4 million. I'm going to be a billionaire. Okay, cool. I just have to wait a few years. And then the unhappy people are going to be like, man, I should have bought it. I knew I should have bought it. And now look, it's going to go even further. I guess I should buy this thing tomorrow when it's at 73K, right? So it only serves to stir up an emotion. It doesn't help you. Meanwhile, the guy has over 5,000 views in real time. Okay, real time people watching him. And meanwhile, I compared this to someone else that was doing technical analysis. And the technical analysis, and they weren't some unknown person. This was a very well-known entity that was doing this technical analysis, and they only had 150 viewers. So that just, I mean, I know I don't know if that's a very good comparison to do, because I should probably do a whole collection of, fundamental streamers versus technical streamers instead of comparing only one of each. It's a small sample, but still the numbers were very dramatic. There was a lot of contrast, 5,000 versus 150. So I don't know. I guess it's just not me to start throwing in these ridiculous and useless facts and figures that are just going to make you happy, right? It's sort of like porn, I guess you could say, financial porn. Oh, look at this chart. It's going to make you really happy, right? I mean, come on. Anyway, all right, so you guys can see. I guess that's why you guys follow me, because you guys like reality, or you guys realize that reality is more valuable than facts and figures that give you the illusion of being informed. I've seen a number of people use that technique, by the way, where they just glorify information that doesn't really help you right now. It doesn't help you make better decisions. It doesn't help you make money. It just makes you feel a certain way. That's the internet. Okay, anyway. Hey, Will, good to see you. All right, cool. All right, so I just wanted to run that by you and just kind of get your feedback on that, get a little bit of an opinion from you guys. All right. So, yeah, I'm not going to start throwing in these useless facts and figures. I'm going to continue doing my technical analysis, and I'm going to find other ways to bring you value. I'll tell you what I really want to do is, when we have our script running, I want to demonstrate day trades using the script. And what I'd like to do is do that with a real account. Like, let me show you, let me take this trade in real time and let me show you. That's what I'd like to do. But we don't have the script yet. So anyway, I think that would be very valuable, because then you can see something in action and you can actually see something happening. Not, oh, in 2040, price is going to be this, so maybe you should buy some now. Okay, enough ranting. Let's get into this chart, shall we? So we touched the high of 73K, right? So you guys read my TradingView article. Some of you, I guess, read the article on Saturday. I published it. This was the peak so far. Not much further above than this blue rectangle, right? This blue rectangle right here is the reversal zone. It's the high probability reversal zone. And as you can see, we blew through it, right? Only to, look, we tested inside of it, broke out of it again, only to return inside. So here's the first lesson here. When you're dealing with something like this, because I want to talk about, again, today's, what we're talking about with the technical analysis part, I want to show you the key levels for this corrective cycle that we're in, right? But I have to start out by showing you this first thing, which was the reversal zone, because there was plenty of warning that this pullback was coming. While everyone was saying this is going to 100K, okay, and all that other nonsense, as usual, there were warnings, okay? So let me just point out what those warnings were. This is a 4-hour chart. Let's go to the daily chart real quick, okay? So the warnings were very simple here. We had this candle, this 10,000 point candle, which was like 2 weeks ago, which completely got recovered, right? But the fact that it could sell that harshly in that that short period of time, one day, and that occurred inside of this range was a warning. Like, why is that a warning? Because someone is willing to sell, and sell heavy, inside of these two lines. These two lines represent the previous all-time highs. Okay, this zone basically goes back to 2021. If I show you the monthly chart, I've showed it before. I don't want to waste the time right now, but that's what these two lines represent. So it was a highly vulnerable area to begin with. Of course, the wave count, we were around a fifth wave. Okay, I now believe that this is the fifth wave. This is the beginning of it, right? This is the A wave of the fifth wave of the corrective wave after wave 5. If you can count 5 waves in any structure, right? Usually the next structure that's coming is going to be corrective. And that's the way it is. So once this wave completes, it went a little further and then in everyone's face, right? So we should not be surprised, because I've been talking about this. Now, some of you can argue and say, oh, but every high this thing makes, you've been bearish. I'm not bearish on Bitcoin. I'm risk adverse, right? So I'm always going to say we have problems at highs, okay? In fact, this zone, right? You can't see the whole thing from here, but this zone goes up to like 80. It's like 83K. There's a reversal zone here. In fact, I'll show you on the monthly real quick. All right, I might as well just show you. So there's a reversal zone that goes basically from here. It's like something like this. Okay, I measured it before. It's something like this, right? It looks something like that. That's a high probability reversal zone for this thing to turn the other way. And so far, it's trying on the smaller time frame, right? But what this means is there's plenty of room for this thing to fool around in between 73K and 80K, and it's going to look really bullish, and everyone's going to be all excited and having a party. Meanwhile, you're taking the most risk. These are the worst levels to be investing. The worst. I don't care where Bitcoin's going to be in 2040. These are the worst levels to invest. If you want to invest, it should be tiny. There's never a bad place to invest. It's how much you invest. It should be tiny. Okay? If you go back a few weeks when I was telling people, look, if you must get in at 50K or 55K or 60K, invest small. So if it continues higher, at least you have a piece. But if it turns, you won't be so worried about it, right? Now, imagine the guy that bought it at 73K, right? Now he's stuck in this thing and he's hoping, right? And he's hoping in a very, 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 very bad area to hope. This is not a bottom. This is likely a top, right? So let's talk about the corrective wave, right? So we have 5 waves in, and we have our first, what appears to be the A wave, right? Corrective waves, I'm referring to wave analysis. Corrective waves typically unfold in 3 legs, right? So we see one leg here, and usually the 3 legs are made up of 3 legs themselves, although they don't have to be. You can have a 5-3-5 pattern, for example. 5 waves followed by 3 waves, followed by another 5 waves. Those are like standard ideal wave structures. The market doesn't always unfold that way, but it gives us kind of an idea of what it can look like. So we have an A wave. B waves, right, are usually going the other way, right? They follow the trend, but they're part of the corrective cycle, which means they don't make the new high. But keep in mind, a B wave can make a new high and still be a B wave, but it usually fails pretty quickly, right? Like if this B wave made it up to here and then turned right away, it's still a B wave, right? While everyone else is saying breakout, new highs, here comes 100K, right? When you're hearing all that, and then the next candle is like a bearish pin bar or whatever, and it's turning right back inside the range, that's the B wave. Now at this point, right, we're getting our little B wave, the beginning of it. Usually B waves start out bullish, right? They have a little correction like this, sort of like that, and the next leg can be something like this, bullish, sucking everyone in, okay? Only to be followed by the next broader corrective wave, which is the C wave. The C wave, and in this context, can take us back to 64K, maybe slightly lower. All right. So this is the structure that you are anticipating over the next week. Will it play out like that? I don't know. But this is what it can look like when you get corrective structures in a corrective cycle. Now, how far can this corrective cycle go? There's no way to know. But what you want to do is look at previous levels. So 64K, which is right here, right? The 64K area, clearly that was a level. In fact, I shared a chart recently. In fact, it was on my TradingView article where this area was highlighted, okay? The other area is going to be like the mid 50s, right? The low of this is 59, right? You have this area here, which is like, what is that? 56, this area right here. That's a major support area, okay? And that's probably it's a lower probability, but the market, this cycle can correct that far. That's a reasonable correction. That's not even changing the trend. That's just a corrective move, right? If I put my proportions on here, I mean, 382 is 59, right? That's the 59 area. And the 618 is 51. So this zone is basically in between. That's a high probability area for longs, particularly on the swing trade time frame. Does that make sense to you guys? So what do you do now? Well, if you're looking for swing trades, you want to note your high probability levels. So we know that basically 51 to 56, that entire zone, you say, well, what good is that? Well, it gives you an idea that if you see a reversal in that area, especially on a daily time frame or on a 4-hour time frame, and you see a complex reversal, like a double bottom develop in this area, you know it's a high probability long. That's worth giving it a try. and then expecting a decent movement back up toward a test of high. Maybe we don't get the higher high, but a test of high would be up in this area, lower high, a broader lower high. What I suspect is once this halving takes place, we have what, like 30 days left, something like that, before the halving occurs, right? I suspect that this situation is going to be like buy the rumor, sell the news. All the buying has been bought, and they say, oh, but that's not true. These ETFs are going to be buying forever. If they've been buying forever, why do we have this pullback? If they're buying forever, why do we have this pullback? If all these big companies are buying and buying and buying and buying, we shouldn't have pullback, right? We should be pushing highs constantly. No, they're not constantly buying. We don't know what they're actually doing. Everyone's just guessing. So I don't go by any of that information, right? Don't get fooled by that. Don't be misled by that nonsense. What you want to do is look at these levels. And again, I'm speaking from the short term. I'm not talking about where Bitcoin will be in a year. I'm not talking about where it'll be in 6 months. I have no clue. I go by structures and levels that are visible now based on recent price history. That is how technical analysis helps us, right? So again, the levels for this corrective cycle, 51 to 56, right? This area here, 51 to 56. 51 even means like 50K, right? That area right there. And then we have this current area, 64K. 60K is probably going to see some action because it's a whole number. If price gets that far, like if price pushes below 60K in the next move, 64K, something like that, that puts you around 60K, right? Which is around here. That's a whole number. That would also be a failed low relative to the 64K low. So if you can get that kind of price action, that would also be an ideal setup for a swing trade long. And if you get that, and you get the next leg higher, a reasonable place to expect to take profit is in the high 60s, perhaps 70K, right? Where it's kind of fooling around right now. That would be your place to get out. As far as breaking out and keeping going, maybe it can happen, right? Like I said, this thing could push up to 83K before we see a major turnaround. This isn't a major turnaround yet. It can turn into one, but it's not one yet, right? To consider this a major turnaround, we need to see a break of 50K. That's a major support. If we take out that 50K, then we are in a broader corrective cycle. But only then can we confirm that we're in a broader corrective cycle. Does that make sense? Before I keep rambling here, let me just check in with everyone. Does that make sense? I want to make sure you guys are on the same page with me. So the whole point of doing this analysis is not to forecast the future. Anyone that claims all that, you know they're joking, right? You know they're just entertaining you. No one knows the future. And a lot of people are coming out saying, see, I told you it was going to go to 73K. I told you 6 months ago. All right. Coincidentally, it happened to work out. That's the way this works. Now, what we're doing here is we're preparing for a narrow range of scenarios. If the market delivers one of these scenarios, then we should not be surprised. We are prepared because we are narrowing the scenarios. So what I mean by that, for example, is one scenario, Bitcoin going to zero. Sure, technically that's a scenario, but the probability of that is extremely low. I don't think Bitcoin's going to zero. I don't think it's going there tomorrow. I don't think it's going there next month. I don't think it's going there in 6 months, right? It's a very, very extremely low probability. So that's not a range that's not a scenario that we consider, right? That's not in the range of scenarios. We want to narrow into a range of scenarios that are possible in the next couple of weeks. And if the market chooses that path, we can then do something. We can measure risk, okay? And then figure out how we're going to capitalize or take a trade if that's what we're trying to do. Now, I'm speaking from the swing trade time frame. All right, I see some chat here. Let me see what you guys are saying. Your analysis is perfect, but I think you need to probably be more optimistic in general. Optimistic? How is that going to help you? What I want to be is objective, not optimistic. I want to be objective and I want to be shaped by what the chart says. I can be optimistic, but that's the same as lying to you Because what if I was optimistic, Peter, at 73K? Oh, this thing's just getting started. I'm being optimistic. Bitcoin's going to be at 100K very soon, and you're going to buy it at 73K. And then you'll say to me, maybe you should be a little more realistic. Really? All right. You can say whether we will be horrible or whether it will not be good, but next day will be sun. Okay, I'm not sure what you mean by that, but my goal is to be objective so that I can give you a more objective view of the market so that you're prepared for things, right? You're prepared for where this thing could pull back to. And if it doesn't pull back, sure, I can give you a more positive view. I can do that, but I'm never optimistic at highs. And I've learned that over the years that I've been in this. It's a bad idea to be optimistic at highs. We see this unusual situation, but I've talked about these breakouts. I've talked about this stuff in optimistic ways. But when we push highs, I'm very skeptical, okay? And I don't get to be optimistic at lows because we never get to push lows. These aren't lows. All right, makes sense? Okay, cool. I know the future. There is going to be a fake... That might be good for Bitcoin. Or maybe they're going to try to steal all the Bitcoin. Maybe aliens invented Bitcoin to begin with, to mess up our economic system. All right, anyway, conspiracy theories. So this is what I'm talking about being prepared for this corrective cycle. Because again, and Peter, just to your point, and I'm not yelling at you or I'm not trying to make fun of you, but I want you to understand that when there are 5 waves, there's nothing to be optimistic about, really. 5 waves means the party is over. That's usually what it means. This is not something that I've made up. This is something that's been around for a long time, right? It's part of the wave forecasting method. And 5 waves. This impulse structure is a psychological pattern. That's really what it is. And a 5th wave means usually that the psychology that was driving this thing is no longer, its potential becomes very limited in the short term. That's what it means. And that works the same way on the bearish side. If I could count 5 bearish waves, let's say this turns into like some sort of impulse, right? We get B wave, and the C wave happens to be impulsive, meaning we get 5 waves. And we get a 5th wave into 50K. That's the next leg is probably going to be bullish. Right? That's what I would be saying in that situation, but we don't have that situation. Does that make sense? Okay, so let me clean this chart up a bit. How are we doing time? Okay. All right. So now something a little more optimistic based on what the chart is saying. 64K may become a double bottom. All right. And we may not get that full extension of the B wave and C wave that I'm talking about. Right? The market doesn't have to follow the structure. It's just the tendency, right? So be prepared for the tendency, but the market may show something else. If we get the failed low and we get the run, we get another run that tries to take this thing back up into this area, that scenario still doesn't change much. I'd still be looking for the swing trade long. I'd still be looking to get out before 70K, right? Because I don't suspect that the new high is going to be very easy to be made here. What I suspect in the long run, again, it's just based on experience. I suspect Bitcoin is going to be more like gold, right? And if you know anything about gold, and I mentioned this in my article, gold, I can show you real quick, right? If we go to XAU, gold has recently broke out, XAU USD, right? Gold has recently broke out. Let's go to the monthly on gold, right? Monthly chart. This is the monthly chart on gold, right? I mean, look at this candle this month, right? Really strong. Everyone's very excited about gold right now. But look at this, okay? This breakout just occurred recently and may have something to do with this Bitcoin situation. Look at the monthly pin bar the week before. Interesting. But anyway, the point is, this is a breakout. Look how many times it attempted to break out, right? Well, that's not a breakout. That's the first time it established the high. Back in July or August of the year 2020, okay? We are now in 2024. It attempted 2 other times to break that high and failed 2 other times. Every time it attempted this high, all the gold people came out and they said, oh, this thing is going to 5,000. This thing, buy all the gold you can. And the next thing it would do is turn around and spend the next few months going lower in your face. And this is all while we had inflation and mega inflation and hyperinflation, and we're printing money everywhere, and the government keeps printing money, and gold has this synthetic short, and blah, 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 blah. And gold would still pull back, okay, for whatever reason. And now we break out. Now. So my point is, Bitcoin can do something like this after the halving, right? And when the motivation is no longer there, and we don't have that driving factor, then it may do this it's possible. That's just one scenario. So just be mindful of that. Now, of course, gold is breaking out now. Will gold continue? I mean, if the next candle looks like this, right? The next candle looks like that, then I would be optimistic, a little more optimistic, because breakouts are usually meaningful if they can hold, right? And gold can test 3,000, in my opinion, if the breakout can sustain itself, because we haven't seen something like this again since 2020. But I'm pointing that out because I suspect Bitcoin can do something similar, right? Now we can argue all we want about, whoa, but the ETFs haven't finished buying, and there's going to be this, and there's going to be that, and there's going to be that, and this and that, and this and that, right? Well, whatever. I don't pay attention to that stuff because it doesn't help us navigate the short term. All right. If we're going to make these magical moves on Bitcoin and we're going to work our way to 100,000, chances are it's not going to be in a straight line. So I want to find lower risk opportunities. That's what I'm interested in. I don't want to take high risk, especially, I mean, I'm not in at these levels. I'm not invested at these levels. And I don't mind missing the move. I don't get all affected by that because I know there will be more opportunities. And working on smaller timeframes, there's plenty of opportunities on smaller timeframes. So that's the key thing here, right? So let this thing test these levels. Right now, we're looking at a corrective structure that can take us back to possibly 64K. If that's cleared, we're looking at 60K. If that's cleared, we're looking at like mid 50s, right? 55, 56, something like that. If that's cleared, you're looking at the 50K area. And if this thing is going to remain strong, then 50K really should not be cleared, okay? Those are your levels. That is how you navigate the corrective structure if the market is going to follow that path. Look at the main levels. As a day trader, those levels can also be very valuable because if you're at one of those levels and you're seeing reversals on your smaller time frames, those are high probability levels. What separates day trader from swing trader from investor is the amount of risk that you take. You need to understand risk, okay? A very common mistake that I see all the time is people will take a day trade, but then they have a swing trade or they'll have an investing take profit. They'll be like, well, I bought this thing for the day, but I'm going to hold it for 5,000 points. That's out of proportion. So what happens is you have to take more risk to do something like that. So it's really not a day trade anymore, right? You can't mix. It's not a good idea. If you're taking a day trade, you stick to the day trade. If you're taking a swing trade, you keep it that way. If it's an investment, you keep it that way. You keep them separate. You have to keep the mentality separate for each one, right? To keep the risk in proportion. That's the key thing. All right, so let me see what I'm seeing here, what kind of questions I got. A wave 3 has 5 waves and the party is not over. It's over only for a few weeks. All right, so a wave 3 has 5 waves. Okay, so here, the thing is, corrective waves, you have like a wave can be 3 or 5. Corrective waves are confusing because they don't have to be 5 waves or 3 waves. They can be a combination. Like the A wave can be 3 waves, and the first leg of it can be 5, followed by the B wave 3, by the next leg 5. I'm not going to sit here and explain all these wave count things, but the corrective waves can be very confusing that way, right? Don't be confused. Just understand your levels and understand if the levels are breaking. If 64K breaks, this thing is more likely the correction is likely to continue. Look at your support levels. Make sure that you're watching them. Write this on a piece of paper so you know what to expect around those levels. If the market shows you something other than a bullish reversal, that means it's still in corrective mode, okay? The biggest mistake to avoid is don't get caught up in all the hype and all this stuff. They're going to talk about the halving. They're going to talk about this ETF is buying this. They're going to bring up all these optimistic things that do nothing to help you. They just make you feel a certain way. It's like watching a cartoon for entertainment. you watch a cartoon, you laugh, and that's it, right? It's the same thing. Please equate the two, right? Using a chart and arriving at these levels yourself is really how you control the risk. Now, the whole point of this whole thing too is you have to know how much risk you're willing to take. If you're not willing to take the risk, right? Like people say, "Oh, I want to." You keep saying not to buy this thing, and I wanted to buy it at 50K, and now it's at 73, whatever, and I never bought it because you kept telling me it was going to pull back. I'm looking at things in terms of risk. If you're not willing to take the risk, then I don't know what to tell you, right? I mean, and then what happens is at 73K, so I can't take it anymore. I'm willing to take the risk at the absolute worst price. That's usually when you feel okay to take the risk. Okay, so you have to separate yourself from that's an emotional thing. You have to separate yourself from that, right? You have to basically look at if you're going to buy this thing, right? Whether it's an investment, whether it's a swing trade, you want to buy this thing at attractive levels, wholesale levels, support levels. There's no question. I've never been bearish on Bitcoin. I'm just risk adverse, and I'm more risk adverse at certain levels compared to other levels. All right. I always tell people I don't short this thing. So you won't see me saying, well, this thing's going to zero. You won't see me saying that. But I am looking for support levels. And it's very frustrating. I can understand how you feel when this thing doesn't pull back for months. Okay. It's an unusual situation. This whole ETF thing, it's unusual. But they're not going to buy forever. All right. At some point, they're going to whatever. We don't know what they're actually doing. Right? And they only report this stuff after the fact anyway. They don't tell us in real time, whoa, we're going to unload this much right now. We're going to do that. They don't tell us in real time. So we don't know what's going on. And then we have to depend on some YouTuber to find it on Twitter somewhere to then report it to us and tell us a week after the fact, Vanguard just sold a billion coins of blah, blah, blah a week ago. Great. Thanks for telling me. Thanks for telling me a week after the fact. That really helps. Okay. So we need to anticipate. We need to be ahead, not behind. Levels and structure based using recent price history can help us anticipate what's coming in the near future, not the far future. The further out you go, the more random it gets. Okay? This situation that we're seeing right here that everyone's getting very excited about is unusual. And I'll tell you what threw me off. Because if you go back to my streams like months ago, and people were saying, I think we were fooling around like 35K or whatever. And people were saying, this thing is going to 45K, 50K. And I would say, no, it's not. And they would say, yes, it is. And I'd say, okay, look, anything is possible. But here's why I was not a big believer. And that's because I was looking at interest rates. Okay. And I still look at interest rates. And the interest rates were not telling the right story. This is the 10-year note futures, right? This is what I've been looking at. And this situation that we're seeing right now, let's look at the monthly, right? The situation that we're seeing right now is definitely not in line with interest rates, right? There's something else going on here. This is the 10-year note futures. There's nothing bullish about this, right? So we have lower high, lower high. It looks like we're going for the low again. Rates are inverse to this. So if this thing makes the lower low, that means rates continue to rise. Now, maybe Chairman Powell will give us some insight to this on Wednesday, right? That's usually what people expect from him. But, on top of making adjustment to the short-term rate, which, whatever, I don't know what he's going to do. But if this continues lower, that means rates continue to rise. That means money gets more expensive, right? This affects a lot. I think this seriously affects the buying power of the retail trader, right? If money is harder to come by, people get paid less and people don't buy stuff. And that was my argument. Like, where's the money going to come from? Well, institutions. That's where it's coming from. And that caught me off guard. I was not expecting that. I was just using this as my gauge. And this was not a very useful gauge, even though it's still saying that rates are rising. Bitcoin and gold should not exactly be behaving this way. But I guess it's because we have all that fiscal policy expenditure going on, which is creating the inflation, right? Because the inflation is not coming from here. It's coming from somewhere else. And that's, I think, part of what's contributing to stuff like gold and Bitcoin. Again, that's my guess. Okay. So does that make sense? I mean, this is completely, with rates rising, this should not be doing this, pushing highs, theoretically. but it's pushing highs. Okay, so people that get caught up in that kind of stuff, this is why you can't get married to these economic theories and all this other stuff, because if there's some sort of unusual situation going on and you fail to address that situation, you can get caught on the wrong side of something like this. Okay, I mean, imagine if you were shorting this because you're like, well, rates are rising, this thing can't be going higher, and this thing goes to 73K, right? Senselessly, because other factors are driving it. We will never know all the factors. Doesn't matter how many YouTubers you watch showing you all these fancy graphs. We will never know. Okay, so that's why I'm a big believer in price action. Price gives us a sense of reality of what's really going on. All right, and if we're using price action in relation to price structure, which is trend, and we're looking at levels, we can project this information into the near future and have at least some sort of idea of what to expect. Okay, and then from there, it's not over from there. From there, the market needs to confirm. All right, and that's a lot of people miss that part. The market has to confirm. If it doesn't confirm, we have to adjust. The market doesn't adjust to us. We adjust to the market. The market is always right. We're just guessing. We're like a sailboat with a sail. We're trying to find the wind. Okay, we don't tell the ocean what to do. All right, it's the same idea. Okay, so yeah, Emad, actually, I haven't counted the waves on that monthly chart. There might be. Let's see. Let's take a look real quick on that monthly. There might be 5 waves. 1, 2, yeah. Well, yeah, I can count 5 waves on the monthly there. Is this the monthly? 10-year note. 1M. Yeah, that's the monthly. 1. This is 2. This is 3, 4. Yeah, 5 waves can be counted. So a bullish corrective structure in this situation is possible. Okay, that's possible. A bullish corrective structure. And we had the first attempt of it, the green candles, the failed low, but we're not getting continuation yet. Keep in mind, fifth waves, this is very frustrating, but fifth waves can extend. And the other thing with the bonds is while they're supposed to trade on their own, right? The 10-year note trades freely. It can be affected by monetary policy, right? So if the Fed decides to do something unexpected, then it's going to affect how that trades, right? Which can break the wave count, or it can nullify the wave count. Does that make sense? It's tricky, but that's why we can't get married to waves either. They're just a guideline. But based on that, yeah, a bullish corrective structure is likely over the next few months. But is the Fed going to help that along? Right? The Fed controls the short-term interest rates, right? The 2-year note, but it can have an effect on the 10-year that trades freely. All right, does that make sense? I don't want to confuse people. One possible explanation is that the world no longer perceives the U.S. debt as safe and is starting to use alternative. That could be, right? And again, that's sort of like the inflationary argument, right? Because our money is worthless. Our dollars keep buying us. I saw something, the fake guru that I watched put up something that was interesting to me, said that there was 23% inflation. We were at a 23% inflation rate, real inflation rate, something like that. I'm like, oh, that's interesting. I could certainly see that at the supermarket. I could see that in play. So that's a possibility, right? So before we get all caught up with like all that stuff, don't be confused. This is why charts is sort of like a shortcut. You don't need to be an economist, right? You just have to understand trend. You have to understand levels. And then you have to understand price action, right? And those are the elements that I talk about in my training program. There's a link to that in the description, by the way. And I'm giving a sale on that. So check the link in the description. I think BTC will correct after the halving. I'm sorry if I say your name wrong. Market movements are contradictory to market data. Yes. And I'm saying don't be confused by it. Never get in the market's way. Let the market do its thing. Okay? It wants to be bullish, let it be bullish. It wants to be bearish, let it be bearish. Don't let your opinion get in the way, right? And if you take a position, the most important part of that position is not your opinion, it's the risk you're taking, right? So you decide, I'm willing to risk this, I could be wrong, and you could be wrong. And that's the part you have to deal with, being wrong and losing the money, right? That's the key part of this whole thing. People are always focused on, I'm going to be rich and I'm going to be a billionaire and I'm going to be a trillionaire and I'm going to show you the optimal levels and blah, 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 blah. It's all about the risk you take, how willing you are willing to take the risk, how your willingness to take the risk, and what's going to happen if you're wrong. Okay. You have to risk responsibly. All right. So enough of that. I could rant about that for hours and hours and hours. You guys got this chart thing? Am I clear? Do you have any questions about this chart thing? I know I'm talking a lot more. I told Steen earlier today. I'm going to keep it brief. I guess, you know what happens. I talk too much. Steen, do you have that trade for me? Why do you start your bull run count from 38K, not 25K? This whole class start could, well, 38K, because this is the fifth of the fifth wave. That's why. I'm not going all the way back to the bottom. I'm not going to go all the way back to here at 15K bottom, because I'm counting the fifth of the fifth wave. This is the fifth wave. This entire thing is the fifth wave of that structure. That's most important to me. Okay. And then we get the fifth of the fifth wave, which means the party is over. That's why I count from there. I'm only noting the fifth wave here. All right. The other waves, they're in. I don't need to know them. I need to know the fifth wave. When you're doing wave analysis, the most important waves are wave 4 and wave 5, because that's usually where there's going to be a change. Right? Wave 4, we're anticipating wave 5. Wave 5, we're anticipating the next correction. So those are the only two waves I focus on. So I hope that answers your question. Thank you, Steen. So Steen is sharing this trade here. This right here is from the trade scanner. So like I said, right now the trade scanner sends emails out, sends signals to your emails and all that. There's a free trial, this and that, whatever. But like I said, we're going to be working on making the trade scanner into a script that you can conveniently put on your chart and work on any time frame, okay? Not just the 4-hour. But let's take a look at this trade real quick so I can illustrate this. The trade scanner got stopped out of a lot of trades, right? It went long, a whole bunch of trades. So this is Litecoin. Let's go to the 4-hour chart. The trade scanner is fixed onto the 4-hour chart, basically, right? And the script, again, like I said, will allow you to look at any time frame. If you want to look at a 2-minute chart, you'll be able to. And again, it opens up a lot of day trade opportunities, which I plan to illustrate on these streams. Litecoin, this was called on the 16th, okay, at 8 p.m. entry, price at 89.77. Okay, this was a long. So this was sent out by an email. Let's just put this chart on this trade real quick so you guys can see what it looks like at the time. Because the key with these, and I think this is an excellent learning tool on how to manage trades. The trade scanner calls the trade for you. It tells you where to get in, tells you where to get out. Then you have to manage it. There's no better learning tool than that, right? Because you don't have to go through all the, where do I get in? Where do I put the stop? You don't have to go through all that. All you have to do is recognize conflicting signals, which is a lot easier. All right, now let's start with the stop loss. 82.44. Where is that? Let's see. It's right around here, right? 82.44. It's right around where we are right now. 82.44, right? It's right there. Okay, and where's the 16th? It's right here. Okay, so, and the entry on this thing was 89.77. Let me put that on the chart. It's up here. It's right up here. That's the entry right there. Okay. And to take profit on this thing, although it doesn't matter, we'll put it on here anyway. 175. Okay. Way up here. $100.75. Way up here. Okay, now that's the trade idea. Okay, this is what came out on the 16th. This is the trade idea. Now, it went straight to the stop, as you can see. It took the trade and went straight to the stop. See that? This happens But the question that you have to answer to yourself is, were there warning signs to get out earlier? Do you have to wait for this thing to go to the stop? You don't, right? So the robot doesn't know any better. The robot's going to get stopped out, but you can know better. And here it is. So this was the entry. I'm going to assume that it was that green candle right there, right? Around that time. Oh, 00, so 4 o'clock. Actually, it was a candle after. I believe this was the candle, right? Where it took the trade. Now, so it sends you a signal. You check your email. It tells you to buy it. So you buy it, right? The next candle that you get after you buy it over the next 4 hours looks like this. And make that nice and big. In fact, let me do this too while we're at it. Let's erase. I want to show you what this looked like at the time. We can go back to the replay here, right? And can I get my replay? There we go. So this is what it looked like at the time, right? So the trade scanner sends you an email and it says buy Litecoin. And that's the trade. The information that I'm putting on the screen here, that's what the trade idea looked like, okay? So it tells you, and this is what it looks like. So you buy it, okay? And as we know, the next candle, let's play one candle, looks like this. That's how the next candle closes. This is your next candle. So let me ask you guys a question. Is this the candle that you should be seeing after you go long? Yes or no? I think that's a pretty straightforward answer. Oh yeah, thanks, Armand. Yeah, if people do me a favor, press the like button, press the subscribe button. If you like my content, it helps. I appreciate that. Thank you. Also boost on TradingView. All right, so you guys following me on this? Is this candle, Stian says no. This is not the candle I should be seeing after I go long Litecoin. Anyone else? Is this the candle I should be seeing? Yes or no? Is this the candle I should be seeing? Or should I be seeing a candle that looks like this? That candle, so big and red at first. That's risk going higher. Right, so I think you can all agree that this red candle is not what we should be seeing. The trade scanner, understand, it's a momentum system. So if it calls a long, that means when you get in, the next candle that you should see is bullish, right? That is what should happen next. So if that does not happen, and instead, you check, maybe you go to sleep, you get up in 4 hours or something, and you look at your chart, and you're like, what is this? That's not what I should be seeing. What should you do? Should you let this thing go to the stop? Your stop is all the way over here. Should you let this go to the stop? Or should you get out early? That's the question that should go through your mind when you see this. What should I do here? Should I go to the stop, or should I get out early? Anyone want to answer that question? Besides Stian? Stian answers all the questions here. Anyone else? I appreciate Stian answering all the questions. I want other people to contribute. Make sure they're listening. Get out, Monica says. Get out. Yes, get out. You can get out. You have that choice. Now, if you don't want to get out and you say, well, I'll give it a chance. Okay, well, that's what you have the stop for. But the better thing to do is, this is not how it should be behaving. Get out. Take a small loss. So let's just say you don't get out here. Let's say, this is hardly any loss. The entry, again, was 80, what was it? 89.77. If you got out at the close of the next 4-hour candle, so you waited 4 hours, this is the candle close, 88.31. Okay, so you're losing a dollar, what was that? 88.31. You're losing like $1.30 or $1.50, whatever. You're losing, taking a small loss. But let's say you got out at the bottom of the candle. What is the bottom of the candle? 86.26. So you're losing $3. Okay, as opposed to losing 82, right? So you're losing like 89 to 82. That's $7. So you're reducing a $7 loss to a $3 loss or possibly a $1.50 loss. That's the better outcome, is it not? Now, if the next candle looked like this instead, what do? Nothing. You let it do its job and see how long it takes to get to the take profit, right? That's what you would do. That's called trade management. That's why this is a very, very useful tool, because you see this, you know what to do now. So if I continue to play this thing, right, and we want, look at that candle. Good thing you got out here, like you said, get out, because this thing went straight to the stop. Now, of course, we knew that in advance because we saw the chart right before I put the replay on it, but you get my idea. You had 4 hours to make that decision, okay, or at least after 4 hours, so 5 hours. You had some time. It wasn't like a minute-to-minute thing. You had time to make that decision, and this is how you beat the trade scanner. The trade scanner reports a loss. It got stopped out, but meanwhile, you're getting out here because you know this is not how it should behave. The next candle should be bullish. Okay, once you get in and you give it a chance, whatever, maybe you exited on this candle and maybe the next candle does something like that. Okay, maybe you can get back in at the same entry price, right? And if you get a bullish candle close, cool. Now let it ride. If the next candle after that gives you a bearish pin bar right here, maybe you should do something at that point, or maybe give it a chance. Maybe move your stop to break even. You have all these choices, right? And that's what trade management is all about. That's why this trade scanner is a very helpful tool in that area, because it helps you focus on the trade management, not, oh, I need a system. I don't know where to get in. I don't know where to put my stop. I don't know this. I don't know that. That's done for you. All you have to do is decide, is this thing behaving properly? Yes or no. So you basically reduce your decision-making tree to just a couple of decisions rather than, what do I do? Where do I start? What time frame should I look at? What do I, how much, where should I put my stop? All those things. Does that make sense? And this will get even better with the script. You guys clear on that? So if you guys want to do a free trial on that, there's a link in the description. You can just go to the website and sign all that up. It's very straightforward to do. You can cancel anytime. It's very easy to do. I've never had a problem with anyone trying to cancel their thing. It's very straightforward. Okay. So you guys have any questions about this? This is a very good example. Thank you for sharing it, Steen. It also shows that not every trade is going to be a winner straight away. I mean, if you look at the results page, there's a whole string of losing trades, right? But you have to realize that in reality, you would not take every single one of those trades, because they're all the same trade. If you buy Binance Coin and Litecoin and Bitcoin and whatever all at the same time, you realize it's all the same trade. So you wouldn't do that. You would just take one, right? So when you see a string of losing trades, like 5 or 6 in a row, that's actually one, because you're not going to take 5 or 6 trades. Does that make sense? You guys clear on that? So, all right. So I'm pretty much going to leave you with that. Let me ask you one thing. As far as, look at that pullback, right? Following Bitcoin. Do you guys like the idea of the trade scanner? I'm just curious. Or do you find that signals by email is really nothing special? Be honest with me. Just tell me in the chat. I'd like to know. I mean, I kind of have an idea, but I'd like to hear it from people. You want to answer that real quick? My quick survey. By the way, you should join our free community. There's a link in the description there as well. Alex puts a lot of interesting stuff in the community chat. Very, very entertaining too at times. Okay, but there's value there. Anyone on the trade scanner want to just tell me? I mean, do you like getting emails, signals by email? I get plenty of people signing up for the free email. That's for sure. You guys like the email, or do you guys don't like the email? I'm sure you guys would like text messages, but I tried that, man, and the text messages were nothing but trouble, especially for international subscribers. They weren't getting the texts. That's why I went with email this time, because everyone gets the email. And like I said, plenty of people sign up for the free email. No problem there. But when it comes to actually getting the real signals, or getting the people I don't get the same response. Let's just put it that way. You guys like the email? You like that? All right. A couple of people say they like the email. I hope you like the email. I thought people would like it. Okay. All right, you guys. Any questions? Man, the email is a great repository. Repository? I don't know what you mean by that. Imtiaz, good to see you. Email is a great repository. Repository. I mean, you put like a little funny face there, so I'm not sure if you're like joking. I'm confused. That one went over my head. All right. Any questions? Any questions I can answer for you guys real quick? I appreciate you being with the stream. You guys get value out of the stream, press the like button. Let me know. I want to make sure that these streams are valuable to you. I don't want to waste your time. Okay. Just looking back at this, see if I missed anything. Okay. Yeah, I think the 70K level is going to be a good place to take money off the table. Okay. Okay, cool. All right, well, I appreciate that. Also retweet. Oh, yeah. I'm on Twitter, in case you haven't noticed. I stream on Twitter, too. I've been trying to put more stuff on there. All right. Yes, very much so. There 10-year T-bonds add some reasoning to the info. Okay, cool, cool. Well, that's the idea. My goal is to provide for you objective information, information that you can take away and use right away. You should take notes. You have some information, some context each week so that you can go about your week in a more effective way instead of guessing or wondering or getting caught in stuff. That's the whole idea, to provide perspective and also to get you into the habits of looking at markets this way so that you can prepare yourself, right? I don't want you to depend on me. I want you to be able to depend on yourself. And that's what you have to do in order to make these type of decisions, not depend on others. There's so much to say about that. Okay. I really like that you help us anchored in the right. I try. You know, I'm not always right, and I'm not going to sit here and tell you that I'm right about everything. I'm wrong a lot of times, but that's the market. You know, I mean, I don't know where the market's going, but you see what I do. You see how I try to evaluate risk. And that's the habit that I hope to instill in you guys, a risk-focused mindset, which I think will only be healthier for you in the long run. Not all this nonsense. The nonsense that I see just gets worse and worse. And, you know, that's what human nature is attracted to. And it's just something that is not me. Like, I can't fill you guys with nonsense. It's just not something I can do. So if I have to suffer as a result, you know, well, what am I going to do? I have to be true to myself. So anyway, I followed a guy for a few years who was always bearish. He's still thinking BTC. Yeah, you can't have opinions. Why would you fight the trend? Right. I'm only interested. Look, I consider myself, I'm going to say this and I'm going to wrap this up. I'm a student of the markets. I'm a listener. I don't know. I know nothing. That's how I think of this. I know absolutely nothing. The market tells me what to think. I only listen to one person, and that's the market. If the market was a person, the market speaks and I listen, and the market changes its mind and I adjust. That's it. I don't fight the market, and I don't have opinions, and I don't look at valuations and say, oh, this is too much high, this is too low, or this is too high. The market does what it chooses to do for its own reasons. I don't question its reasons. I just evaluate the risk, and I decide, am I willing to take this risk? Yes or no? And that's it. That's all we can do. Okay. All right, people. Again, thank you very much for watching. I hope you enjoyed the stream. I'll see you next Monday. Enjoy the rest of your day, the rest of your evening, wherever you're watching in the world. And thank you for watching.